Thank you. All right. Can you all hear me? Well, first of all, thank you for the Avalanche team for hosting the 2024 summit. Thank you so much, and for inviting me to speak here today. It's great to be here in Buenos Aires, Argentina, and apropos, given its long-standing role in the crypto community, I've had a great time so far. That's been awesome. I want to speak with you for a few minutes about the history of finance in the crypto era, what's coming next, and how Dinari fits into that. As you may know, crypto was born in the wake of the 2008 financial banking crisis. In fact, to jog your memory, the Bitcoin very first piece of data on the network contained the headline from the 2009 January 3rd headline of the Times. And it read, "Chancellor on brink of second bailout for banks." The world was in the midst of a banking crisis, and Bitcoin proposed a potential solution. Everyone could have their accounts and all their values on a public network that was not owned by any one entity. Now, we all kind of understand this a little bit who've been working in crypto for a while. But what that lets people do, both individuals and businesses alike, is send money back and forth without having to wait for some third party to sign off on the transaction. That level of trust increases efficiency and allows more people to participate in the market. Now, since the beginning and birth of Bitcoin, over the last 15 years, we've seen ups and downs in crypto, booms and busts, really great experiments, and innovation and fraud. Fast forward to today, one of the main products that's both survived and found use broadly across businesses in their everyday course of work is stablecoins. And I want to focus on stablecoins for a little bit because I think there's something about their success that teaches us about the evolution of finance. Namely, stablecoins, by inheriting the transfer benefits of crypto, like I mentioned, they apply that to an asset that everyone already knows and they already want it, and it's an enabler. And stablecoins, they benefit from that. For example, I think you understand, but it allows us to all migrate over to this new system without leaving the US dollar, for example. Fiat currency is what we already use, and we have upgraded it with stablecoins. Now, Circle and Tether, by addressing the original concern of that banking solvency crisis, have de facto become the reserve banks of crypto. And specific stablecoins will continue to be trustworthy as long as they maintain that 100% backing. So we can see that transition happening for stablecoins. But moving forward, the narrative continues. We can take that and we can apply the same thing to other assets. And that's where Dinari steps in. Dinari is bringing markets on-chain. We are tokenizing the most trusted assets, the most actively traded markets in the world. By focusing on stocks and ETFs, these are assets people understand, like I mentioned, and they want, and we can do the same thing and upgrade the infrastructure of those markets. In fact, not only do we get the benefits of trust, but because of the innovations in decentralized finance and leveraging that, we can offer new features that simply are an upgrade in themselves on the existing markets. For example, more efficient lending and leverage trading. Here's how it works. On the one hand, Dinari is a global market. We're bringing these individual asset markets on chain and making them available. On the other hand, Dinari is a distribution network and a brokerage in a box that allows companies around the world to have access to these features that I'm talking about, which is really important for bringing all of this and putting it in the hands of people around the world. There are 3 components I want to cover today. Firstly, trusted issuers. Like Circle and Tether, it's very important that the off-chain assets are secured and protected so that they back up the value of these tokens. Secondly, the on-chain exchange technology where we can settle transactions in a public and transparent manner. And third, this distribution network that I'm talking about and ease of use. Let me dig into each of these just a little bit. Firstly, the issuer. Dinari dShares issues tokens that are backed one-to-one by a specific stock or ETF or other liquid assets coming soon. We secure those in 3 ways. 1, Dinari is a registered SEC transfer agent. This means that we have what we need to manage shares on behalf of other people to the point where we could be involved in taking a company public or providing more specific offerings through Dinari dShares. Number 2, protecting those assets with a sound legal structure that guards against pillaging by bankruptcy scenarios or other events. And number 3, independent audits. So when we say that we have what we have, you know that we're telling the truth. The second component here is the on-chain exchange. By combining the stablecoins on the one hand and the Dinari dShares tokenized stocks on the other, now we can build on-chain markets, and that needs to run somewhere, and that's our on-chain exchange. By bringing those together and facilitating this market, we are providing the basic tools that we need to just operate a market. And as I mentioned, here's where the DeFi magic kicks in, and we can start adding new features on top, like leverage trading, other contracts, and more. Now, lastly, in order for businesses to be able to access all this, we've put a lot of time into developing a very easy-to-use developer toolkit. We have a set of APIs. We have a set of automated contracts. Whether you're Web 2, Web 3, or new to this whole space, you can get up and running with us through various methods. This is how we bring it to the people, by combining the trust in the assets, the exchange technology itself, with our distribution network. We have been working with the likes of neobanks, various blockchains, trading apps, even payroll providers, adding retirement investing opportunities. The list goes on, and more are coming online every week. Let me dig just a little bit deeper for a sec before I wrap up here. As we get all of these trades coming in from different networks, different partners, we are aggregating all of those trades into a single network to increase the market depth and efficiency of our entire system. This is powered by Avalanche. We're using an Avalanche L1 in the ecosystem to house both the liquidity provision, the market making, and, as I mentioned, settlement. Now, looking forward, in 2025, we are having new assets, new issuers. We're moving beyond stocks. And this is where things get even more interesting, because you can have stocks, as I mentioned, but private equities, you can have bonds, you can have real estate, all of these things on one network. From an operational perspective, all of these assets being in the same global marketplace allows funds, wealth managers, and a whole new category of market participants to settle cross-asset rebalancing in seconds. Before this, there's a different network, and especially around the world, is fragmented, both across assets and geographies, of how we move money, how we transfer ownership of assets, and how we get all of those to work together. By baking in this one-to-one backed, stable asset, so to speak, paradigm with a single liquidity hub for RWAs, now we can start to have really, really seamless wealth management experience, no matter who you are. If you're a trading app on your phone, or if you're a large institution who is managing on behalf of other people. In conclusion, we have assets, we have new tech, and we have an API and distribution partnerships with more coming on every day. We're having new listings every week, and as I mentioned also, it's very easy to get up and running. So much so that we're having a special offer for new developers, new companies, new fintechs. So please scan that and let's get started. The global stock market is here.
So we have 3 minutes for questions. Are there any questions? There. Okay.
Hi, how are you doing?
Hi.
Provided that you are somehow issuing asset-backed tokens, right? In this case, they can be stocks, they can be high-figure bonds. I recall the case of Synthetic back in 2021, 2022, which was delisted from Uniswap, I think. Synthetic did pretty much what you are doing.
Yes.
And I figure the issue was regulatory, right? They faced regulatory issues. So my first question here is, how have you overcome those regulatory issues, and what makes you like a stable option or looking forward, right?
Yes. Yeah, that becomes the question, given all this. So we've done this a couple of ways. First, the exchange itself that I'm talking about in that network it has its own license. The assets themselves are issued out of the US, but exempt from registration. And so currently we're pursuing other licensing to bring this back into the US, but it's only offered outside the US currently. So that's on the asset side. While at the same time, as I mentioned, leveraging some of the security benefits of being here in the US. And we do, on the issuance side, KYC and KYB, just similar model to Circle. If you're going to mint or burn, you need to identify with us. And then where those get traded, that is a licensing question that depends on where that is operating and where we go from here in the crypto regulatory future. And so what we're doing right now is we've done something that works for now. And we've done it in a way that's flexible enough that these are ERC20s. You can mint and burn with us, and then you can build on top. So if you have a licensed operation somewhere else and you can do direct to retail advertising in your specific region, then I want to talk to you because I can't do that, right? Because so that distribution network solves the regulatory problem as well, because we partner with people who are allowed to do that wherever they happen to be.
And does this mean that those tokens can only be exchanged on secondary markets, which are like regulated, or for instance, can they be traded, let's say, on Trader Joe or any decentralized exchange?
So, right. So if you created a peer-to-peer trade system, right? If everyone in the crowd right here decided that we're going to use a poster board and just, do some bid asks here, and then we all, that may or may not be a regulated activity, a licensed activity, depending on where you are in the world. So we leave that up to the operator of the exchange. So you can talk to Trader Joe about whether they want to trade tokenized stocks on on their platform, but if we were going to work directly with them, then we would ask them to follow our distributor rules. So until the law changes, that's how it is. Yeah.
Okay, so we've run out of time. Thank you very much. You can
Okay.
still talk to him when he
Thank you.
comes
Yes, I'll be in the
down
back.
the stage. Thanks. And we'll have a 5-minute